Elon Musk making headlines after news that he's reviving his $44 billion deal to buy Twitter. The stock halted for about 3 hours, but after it reopened, it surged more than 20% to close out the session at 52 even. For more on what the deal could mean, let's bring in Andrew Boone of JMP Securities. Andrew, great to have you with us. Let's say this is finalized, it happens, and Elon Musk is free behind closed doors without the scrutiny of public shareholders to do whatever he wants with Twitter, experiment with subscription services, you name it. Does that put pressure on the other publicly traded social media companies?
You know, I actually think it benefits them. 85% of Twitter's advertising is brand dollars. So if I think about the companies that were most impacted recently by macro, think like YouTube, think Snap, I think those guys are direct beneficiaries of advertisers saying, okay, Twitter's really volatile right now. We need to go to someplace that's a little bit more stable and allocate dollars there.
Andrew, it's Tim. Thanks for joining us. What changed for Twitter from their analyst day of 21? I rail about this all the time because they talked about doubling revenues and getting their DAUs almost double as well. It's been a farce since that point, and it explains why the stock went from $90 down into the low 20s at its lows. What do they have to do to change this?
You know, I think they're doing a lot of things that are right in terms of user engagement. That's been one of the better parts of the story over the last kind of couple of years. On the advertising side, it's really about building out the marketing stack. So you need more performance advertising tools, really try to replicate what Facebook has built over time. And then the next question is, look, across all of social, how do you replicate what you had pre-IDFA, right? So how do you bring back the targeting before Apple made their privacy changes, and how do you improve the overall return on ad spend for advertisers?
Hey, Andrew, Jeff Mills here. So just a quick question relative to sort of the timeline of taking Twitter private and then relaunching it as a public company. I know I'm kind of putting the cart before the horse here, but I know they were talking about kind of a 3-year time horizon. Do you think anything has changed there relative to what's transpired over the past couple of months and now some of the questions that exist relative to the platform?
I think it's going to be all about execution going forward. And so if Elon can have some success with subscription services, which would increase revenue visibility, the street likes that. If he can start to rebuild that marketing stack, if he can get DAO to reaccelerate in terms of user growth on the platform, all of those things would accelerate the timetable to come back to public markets, assuming the market opens back up, of course. Beyond that, what else would slow that down? The exact opposite, right? If he has trouble in terms of retaining employees, I know there's been multiple headlines there. If there are bigger kind of privacy headwinds that have yet to drop, if Apple continues to turn the screws there, that may take longer. And so it'll come down to execution.
Andrew, great to speak with you. Thank you.
Thank you.
Andrew Boone of JMP Securities. Guy, what do you think? Do you think that Twitter, what's going on, maybe the chaos, the uncertainty, will cause advertisers to go elsewhere?
No, I think people want to stay. Listen, I've always thought Twitter is an extraordinarily powerful property and being underutilized and undermonetized. And obviously that was wrong for a long time, and here we are. So, no, I don't think advertisers are going to flee. There are only so many places they can go. I mean, my problem is, how is, again, this is what we talked about at the top of the show. This has to get paid for in this environment. So what's the knock-on effect potentially to Tesla? And I'll keep coming back to it. Like, to me, if this goes through, it augurs, I think, negatively for Tesla, the stock. And again, if you're looking for sort of second derivative plays, I think Snap, and I think Dan would agree, and or Pinterest on the long side makes sense here.
Yeah, I don't disagree, but it's interesting when you think about Twitter's business. Very soon, we're not going to be talking about it. We're not going to have the transparency if this deal closes. And just to put some context, 10 years ago, Facebook, Meta, went public. It had $5 billion in sales. That is what Twitter is expected to have this year. So think about how poorly they've grown that revenue base, how they've monetized those users. Their users have been stuck. They haven't been growing them. And when you think about the margin differential between, let's say, Meta at about 80% gross margin versus Twitter, where they are at 60 and not getting better. I mean, this business is going to be just impaired because the management and that plan that the whole team was looking at, the 2023 plan, when this news hit the wires today, that team's blown up. It's gone. You know what I mean? Yeah. So what I'm saying is, like, this is kind of like a dead stick right now.
Are you also saying, as a private company, that it's even worse off because they don't have to? This is a company that we're questioning what they're reporting as.
Well, let's say this: if stock-based compensation is a huge part of like how these companies like incentivize people, this this company is being taken out in a manner that he's massively overpaying. He's double paying for that. Usually when you want to buy an asset like this, take it private, you want to retool it, you want to lever it up, you want to bring it out at a higher valuation, and that is the incentive for the new management to come in. That's out the door. That's blown up. So to me, I think the service probably gets worse before it gets better. I don't know how they monetize it better if they're going to be losing users, which I suspect they will, especially if they're going to bring like MAGAtown back to the thing. So to me, I don't know. I mean, you guys are snickering, but that's a real issue here.
Well, I mean, the idea of less censorship is clearly one of his principles.
Yeah. Well, you're wearing your Twitter jacket today, so you seem on board.
It's a coincidence, by the way. So let's say they reinstate Donald Trump onto Twitter.
Yeah.
Would you leave the service?
Yeah, probably. I mean, I don't need to be there for that. I'm not on Truth Social for a reason. And no one other than like QAnon, MAGA conspiracy.
You don't have to follow him at all. You don't have to see anything about Donald Trump or from Donald Trump on Twitter, and that is the beauty of Twitter.
I think we're all.
We
were talking about in the break. We all use it much less. We don't really engage with it. I don't know how they monetize it. I don't see a lot of ads. I don't do micro-commerce. There's a lot of things that are e-commerce. I'm not doing that on that. So to me, if I don't find it,
just lost relevancy in general, though, I think is what a lot of us are saying.
Yeah.
I don't know that.
Well, when it's not a publicly traded company, we're going to be talking about it far less. And I actually think that actually hurts the relevancy within certain verticals also.